much for this day. And God, you are an awesome God. You are a lover of our soul, and we just bless you today, God. Thank you, God, for all that are under the sound of my voice who have joined our meeting today. God, we ask that our meeting be productive and that we learn something that's valuable today, God. We pray, God, that you bless the organizers and those who will present and those that are our board and those that are our members, God. We need them. We need them to have impact and to make a difference. And God, we're glad that you have pulled us all together for such a time as this to have impact in our community. We ask that you bless us and you keep us and to make your face to shine upon us and give us your peace. In the name of our Lord, we do pray and believe. Amen.
Amen. Thank you. Thank you, Ms.
Amen.
Holmes. All right. We're going to kick off and say, first of all, to all the NAREB Dallas fathers on this call, happy Father's Day. So a lot of people are traveling, going to visit family, and your president's going to be traveling soon as well. I'm leaving here going to have my mother her retirement party. So I'm going home to Mississippi for this weekend. Also, we have one of our chair, her birthday is tomorrow. So first of all, I'd like you guys to say, Pat Douglas, happy birthday, Pat. You online?
Yes.
She's on. Yes.
Tomorrow, we're celebrating it tomorrow.
Okay, celebrating it. So those who can attend, but let's definitely tell our chair, because she definitely helps me stay on target and on point to make sure things are done the right way, which is the NAREB way.
Thank you, Mr. President.
All right. First up, Perrette wants to know when is the actual day. Pat.
I'm sorry. My actual birthday is June 22nd, which is Tuesday.
Okay.
All right.
I want to tell everybody what my age is. So.
Nothing wrong with that, Pat.
It's a big one. That's all I can
You saw I didn't ask that. I just wanted
to we noticed.
But you're wondering.
You're older than I am. I know that.
Not the older than you, Mr. Billy.
All right. First up, we will have from Prosperity, we will have Nicole Booker present. You ready, Nicole?
And now, do you have my presentation?
No. Carol, do you have it?
No, Nicole, you want to use what you've used before?
I sent you one this morning.
You're able to share.
Hold on just a second.
You're able to share, Carol.
Fumbling. I apologize. I don't see it. Nicole. I don't see it, Nicole.
Can you email it to her now?
Yeah, I can resend it to. You got disabled.
Oh, I see where you sent it, Nicole. You sent it to my the Women's Council site. I see it.
Okay.
That's why I was looking at my personal. Okay, give me just a second. All right. We're spot on now, everybody. I'm gonna make this.
Good morning, everybody. Good morning, family.
Good morning.
All right, seeing you guys face to face and shaking hands and seeing you, Mr. Scott and Loretta and all of us at the monthly breakfasts, but soon this will be over with and we'll be able to, this Zoom stuff will be over with and we'll get a chance to really fellowship like we used to. Prosperity, you know, of course, is a partner. And I think I've got, what, 7 minutes, Monty?
Yes.
Okay, so we're a partner, we're committed and have been boots on the ground as it relates to helping in the affordable space, of course, and we've got the products to support us to do that. As many of you all know, you know, I've come through BB&T and Regions and some of those other institutions. And so Prosperity Home Mortgage is actually a Berkshire Hathaway company. Okay. I was recruited about 2 years ago and somewhat at the, it began at the national convention, our NAREB convention, where we celebrated 50 years in fair housing, and was introduced to them and got an opportunity to be the community lending manager, which, you know, my job is to get in the community, recruit, and help in the affordable lending space, and particularly with down payment assistance, first-time home buyers, and the education and whatnot. And what they've done is given me, you know, the autonomy to not only do the down payment assistance stuff with TSHAC and Seth and TDHCA, but we also have some stuff within our own personal portfolio, arsenal portfolio type products that don't have any income restrictions, nor territorial restrictions. And then some expedited underwriting too. So let's move to the next slide, Ms. Carol. We'll talk about just a couple of our programs really quick, just in case somebody's not familiar with what we do and who we are. So Uplift program is one that I'm extremely fond of because basically there are no adjusters for credit scores. So if you've got a 580 or you have a 780 credit score on FHA and VA, you get the same interest rate, same pricing. So no hits to pricing, you know, when you have the lower credit scores on the government products. And then the next slide. And so, of course, you know, we have the standard, you know, down payment requirements. And I think everybody's pretty much familiar with the 3.5% down for FHA and conventional going down to 3%. You know, of course, you know, the lower the down payment on conventional, the higher the mortgage insurance hit. And I'm ready for the Home Advantage, which is the next one. And so this is the program that I was actually mentioning. And the beauty about this, you know, this particular program is that, you know, some of the down payment assistance providers, you've got to look out for the income. You've got to look at, you know, what territory. And as you all know, you know, the LMI census tracts and targeted census tracts have become kind of slim to none somewhat. But if you've got a borrower that makes more money to purchase, you know, and they need that down payment assistance, we can do the 3.5% down or the 5% down. It's a second mortgage, no repayment, forgiven after 5 years. There's no interest rate collection on it. But like I said, the beauty about this particular product is that there's no restrictions from income nor geographical territory. I'm ready for the next one. And so we go down, of course, you know, now to the 580, we went back to that. You know, our FHA credit advantage is a good tool, you know, when we can't get those credit scores. I do the rapid rescore for a lot of different clients anyway, but if we can't get those scores to lift above the 620, we do have this program available. I'm ready for the next one. For VA loans, we've always had a strong commitment for the VA, you know, a strong appetite for VA products. And so we don't charge any fees whatsoever on VA loans. Now, of course, if they want to buy down the rate, we can do that. If they want to premium price it where we're picking up, you know, all the closing costs and all that, we can do that. But as far as the processing, underwriting, fees and some of those ancillary fees, we don't charge those. And even when they pay for the appraisal up front, we credit that back at closing. So they literally go in, you know, our standard fee is usually $12.95, not $11.95. So $12.95 plus $5.25 for appraisal. But that, like I said, that money gets credited. So that automatically gives them a little bit of leverage when we're negotiating and working out those closing fees. Ready for the next one? So the bonds, the MCCs, I do quite a bit of those. And one listed as one of the, preferred lenders on the T-Shack site. So I get referrals all over the state of Texas. And right now I'm serving a lot of the Houston market, believe it or not. I get a lot of referrals from Houston just by being on that platform. So doing, a lot of the T-Shack programs and, whether it's the bond or it's the forgivable second lien. Ready for the next one? And so that's our commitment. There's some additional things that we're about to roll out, as it relates to kind of streamlining the process and speeding it up. For example, we've got a PXP program, which will give us a 2-week underwriting. So 2 weeks from the time that comes in the door, out the door. Because what we realize is that time is critical, in getting these contracts accepted. And so, as long as we've got everything collected up front, we're able to order the appraisal day one, closing within 2 weeks. And that's with a 7-day contingency, financing contingency too. So you've got less than 2 weeks that you need to close a deal. And we've got a full file. And this is not for self-employed, it's for W-2. They can have commission, and we'll do those on conventional and FHA. We've got a program that we're getting ready to roll out where we're closing in 2 weeks. From a platform perspective, we've got a day one certainty, which basically the customer has the ability to go in when they apply on my website and have their income and assets verified. And we've been actually doing that program for quite a while. But income assets are verified, within 10 to 15 minutes typically. So when I log in and I'm taking a look at credit, I've got those two pieces of information already collected. And I'm not really sure if there's a lot of lenders that have access to that. That was kind of a premier product and he rolled out for us. But, at that point, they're actually, once we've had that income and asset information verified, they get to underwriting. So it's just literally a matter of me going in, checking all the boxes, going through the credit to make sure everything is correct. And then we're waiting on title and appraisal. So just kind of one of the streamlined processes that we have in place here. Other than Ms. Carol, is there anybody else doing business with Prosperity? Or have done business with Prosperity? Not Prosperity Bank, but Prosperity Home Mortgage.
Prosperity used to be Legacy Bank, or it just converted, correct?
No, good question, but no. So Legacy Bank and Prosperity did merge. But
Yes, you can. Thank you so much.
Can you mute the phone?
I'm sorry.
Someone needs to mute themselves. Okay. All right. Go ahead, Nicole. Thank you.
You're welcome. So Prosperity and Legacy Bank of Texas, they did merge. As a matter of fact, they merged a couple of years ago, right when I came over to Prosperity Home Mortgage. We're not the same. So we're actually in all of these states that are mentioned here on this page, Monty.
Okay.
But we are a correspondent. So, and we're a Berkshire Hathaway company. So, no, we're not the same.
Okay. Thank you for the information.
You're welcome.
You mind providing information in the chat, Nicole, so people can reach out to you in the group?
Absolutely.
All right. Okay.
And I can attest to the fact that working with Nicole has really been a pleasure. She's been able to work with some difficult clients and work with some that were easy. And I just appreciate the way that she's communicated with me and kept me informed and conveys the knowledge. You can hear when you talk to her, the 20 plus years of experience flowing through, and she does a great job of educating the clients when I've had them. So I can attest that I'm really pleased with partnering with Nicole on my transactions.
Okay. All right.
And this is Chris. I guess I forgot. I negated to say it. She's actually helped me with some of my insurance customers as well, and personally. Conspiracy. So I want to thank Nicole for that as well.
Okay. All right. Once again, thank you, Nicole. Next up, we have James J. McGee on banking below 30. You mind unmuting yourself, Mr. McGee, please?
Can you hear me, Muncie?
Yes, sir. I'm gonna try to move this video you sent over so we can listen to it. Okay, go ahead, Jay.
Now go ahead and play the video first, and then I kind of speak to the context
Okay.
of the video.
All right, then let me do that now. Share it.
Homeowners, this incredible tip is just for you. If you owe less than $331,700.
My constituents who are poor, most of whom are African American, my constituents were not represented in a private session, in a closed door meeting to, in essence, negotiate the rights of my constituents away.
30 years ago, when Diane Ragsdale served on the Dallas City Council, she did not shy away from a fight.
You didn't cut your lights on for oxygen.
You came up here and stopped me with crack hours later.
This is Ragsdale 30 years later, and she's still a fighter. Today, she runs a nonprofit that builds houses in the low-income neighborhood of Mill City, where families can own a new home.
A bank loan can improve people's living conditions. And so you cannot talk about economic justice without bank loan.
Ragsdale wants to see economic justice after WFAA found 20% of banks in Dallas County don't serve the minority and low-income communities that live below I-30. She says it's time for the United States Department of Justice to investigate what's happening here.
Every element that's involved in this must realize that you will be held accountable.
The Community Reinvestment Act is a civil rights law that encourages banks to meet the credit needs of the entire community where they operate. The law requires banks to draw an assessment area map, the area where a bank does business, and the maps cannot arbitrarily exclude low to moderate income areas. But we found examples like this. A Dallas bank with just one branch provides services all the way up into Denton County and half of Collin County, but covers virtually nothing.
Dallas bank
30 branch that's overwhelmingly Black and Hispanic. And this bank's assessment map shows coverage to all of Ellis County, Erath, Somervell, Hood, Parker, and Tarrant counties, but excludes the lower half of Dallas, again, where most residents are minorities. And finally, we found when bank regulators looked at these maps and others, they did not identify any evidence of discrimination. Ragsdale says bank regulators have failed to hold banks accountable. That's why the Department of Justice is needed. So when the regulators are failing, what is the role of the Department of Justice?
The Department of Justice has to intervene legally and require measurable outcomes themselves. They have to override the regulators. They have to say, excuse me, you're not doing your job.
And there's precedent for that. In 2016, the Justice Department sued Bancorp South in Memphis. One piece of evidence was the bank's assessment area. At the time, it included 4 whole counties, but like a horseshoe, it excluded nearly every neighborhood in Memphis where the residents are mostly or almost all minorities. The feds said the map was evidence that the bank engaged in unlawful discrimination. Bancorp South reached a $10.6 million settlement with the government, which included $4 million in loan subsidies for minority borrowers and $800,000 to build stronger connections to the minority community. In 2018, the Justice Department sued Klein Bank of Minnesota. And again, a piece of evidence was its horseshoe-shaped map that included the majority white suburbs, but excluded the high minority populations of Minneapolis and St. Paul. The bank protested about unprecedented reach by the government, but agreed to a 3-year settlement, which included opening a bank branch in a high minority neighborhood and spending $1.8 million on marketing, outreach, and affordable loans to the minority community. Nikitra Bailey leads fair lending policy reform efforts at the nonprofit Center for Responsible Lending in Washington, D.C. Why are maps considered to be important pieces of evidence in these cases?
The maps tell us who the banks are actually extending credit to, and it's really important to look at them and evaluate them to see if they are meeting their fair lending obligations.
Are these homes, is this street a look at what might be if there was more capital?
But yes, this is only one small example of what could happen.
An outside investigation. It's what Ragsdale wants, but it's not the only thing. She says community groups have to get well organized, well funded to fight for their equal right to credit.
Redlining is consistent. And our movement against redlining cannot be inconsistent.
In Dallas, I'm David Schechter reporting.
Go ahead, Jay.
So that's one of the, so Banking Below 30, is a series. That was actually the second episode. The first initially one aired in November, actually around Thanksgiving time of last year. And I can kind of put the entire series, in a chat to kind of, in a sense, sum it all up. There are 105 banks in Dallas County. 22 of those are, currently redlining Southern Dallas. That affects, whether they may do mortgages or not. At least as for the capital standpoint, they could be building houses in which that would be beneficial to everybody on the call. We are currently working with legal aid. Right now, we will be filing a Department of Justice complaint on all 22 of those banks. As for the first wave of that movement, anybody that wants to know more information about that, please feel free to reach out to me. And in addition to that, what I've been doing is actually reaching out to banks when they try to open a bank branch to make sure they're not redlining us. So with Oakwood Bank and Grand Bank, they're smaller banks. The FDIC has ordered them to create a plan to market to LMI communities within the Dallas County as far as the census tracts, and also the majority minority census tracts. And that's just a result of my efforts. Anytime a bank wants to open a branch, it's public notice, it's in the paper. So even as far as that effort, encourage more people to join, as far as that. And then this is a list of banks in which, I haven't heard back from the regulator. They're also trying to opening branches, but they've been identified to do something wrong. Origin Bank is on the list. Texas Heritage National Bank, First Guarantee Bank, Susser Bank, and Southside Bank. All of these banks have banks, either in the city of Dallas or Dallas County. So that's important. Again, how do we drive capital to mainly Southern Dallas? Because that's where most of the LMI census tracts is. That's where the majority of the minority census tract. And then as far as like a bigger pit, we've got 2 benefits agreements already signed. PNC Bank and BBVA, as y'all probably know, are merging. We signed on to an $88 billion community benefits agreement, with them. A lot of that's going to be mortgage related because they do mortgages. And then in addition, a CIT Bank and First Citizens Bank, they signed one, and we signed on to that also. That was a $16 billion agreement. And so those are the ones in which we've signed on to. Iberia Bank, which is also in Dallas, they have a $22 billion community benefits agreement, and they do mortgages. So these are agreements in which they are ordered to make loans in LMI census tract. And then upcoming, and it's always good to get in on these agreements because we can kind of, we have leverage, in a sense. And so we have Cadence Bank and Bancorp South, in which both have a location in Dallas. They have a pending merger. And then Pioneer Bank, they have actually their branch is in Richardson, but Sunflower Bank, they have a branch, in Dallas. They're merging. So it's pretty much important to kind of get the forefront of those and kind of, make the voice heard. Because when you look at the lending overall in Dallas, as for there were from 2018 to 19, there were about 10,000 loans done to African Americans. And so just no single bank pretty much did over 500 loans, and that's collectively, and that's about 400 lenders. I mean, so the data is very much important. I mean, so sometimes we're having these conversations and building the relationships, really with the banks. Ask them about their lending data. Ask them how many loans did they do to African Americans. They may tell you, they may say they can't disclose that, but it's public record. And so if you even need access to that information, like just reach out, send me an email, you send me a text, and I can provide that to you. And it's just factual information, not in a sense, whether the example, if money worked for Bank of America, like whether I like money or not. It's like literally like this is the data. And so how do we work from there? How do we develop a plan to increase those numbers, especially as it relates to our LMI community? And so somebody put it for the list of the banks. Yes, I will put that in the chat.
But you got to send it to me so I can make sure they're a member, please. Thank you, Jay.
But I don't have anything. Did anybody have like a quick question?
Well, I got one, Jay. Since the George Floyd incident, has it made more of an impact, and the Boston John making banks more freely to work with us? Is this like a perfect storm? And all coming into where people, they want to, not with the new kids on the block again, they want to be a little more friendly when we come in the bank.
So overall, yes, they are reaching out. They are putting a lot of slogans and pledges out there. But I think the most important thing to remember is that, what are they putting in writing? What kind of partnership do they want to do, long term? When you start talking about that, that's when you really, have something. Ask them, do they want to sign a community benefits agreement? And so, I've challenged some of the banks as far as that, and the conversations kind of, in a sense, die out, at that particular, point in time. So, the pledges are great, action and the measurable plans are, better.
Okay. Any more questions from the body?
My hand up.
Go ahead.
Okay. What about CRA? Is it dead and gone, or what? and what has been the results of their the CRA, those banks that had to perform, that had not performed, I'll say.
Miss, for you guys don't know what the CRA is, that's the Community
Reinvestment Act.
So overall, as far as the banks across the nation, they have about a 99% passing rate. What we found, what I found particularly, here in Dallas, is sometimes the community we have to be our own best advocate. We know the communities better than any bank regulator, probably than any banking personnel, unless they live there or from there. But I mean, so with that, if we're depending on the regulators to point out some of the stuff in which we point out in the story, then they're clearly, as you see in the video, they fail. It's up to people like me and everybody on the call to bring this to attention, in a sense, organize. So long term, next year, we're going to do a Community Reinvestment Act coalition, and that'll be for the Metroplex. And we're going to see, what are they doing? I mean, so the community, it's a rule, it's a law. It's only as good as it's enforced. I mean, so we must, bring attention to like situation. 22 banks that are currently redlining. I mean, that's unacceptable. I mean, so the second step, even for us, for me, is to, file a complaint with the Department of Justice. And we don't need to check with any bank or any banking regulator before we do that. I mean, so that's just, like Diane, Ms. Ragsdale mentioned, us, organizing. Everybody isn't know it as good as I do, because I used to work at the bank for a number of years. But again, I'm not a realtor in a sense also, so things that are going on the ground better than I do.
All right, any more questions for James before he gets off?
Somebody else has their hand up.
Yes. Hi, my name is Ero. Thank you for sharing this information. It's very useful. My question is about like Black-owned banks. So we definitely see that I think you mentioned there's like upwards to like a little over 200 banks in the Dallas area. How many of those banks are owned by how many of them are Black-owned? And amongst the ones that are Black-owned, do they not have resources? Are they also not lending to communities of color? How does that work when it comes to that category?
So as far as the number of banks in Tarrant County, there's 70. Dallas County, they're up to about 110. That's different banks. But as far as we don't have any black banks in the black-owned banks in the DFW Metroplex, the closest one is to Houston. And kind of also what I explained, what I like to say is that there are
Scott, mute your phone, Mr.
black-owned
Scott.
banks.
I'm sorry. Mute your phone, Mr. Scott.
Oh,
Thank you.
there
Go
are
ahead.
22 black-owned banks across the nation. And we have one bank here, a next bank in Dallas that has about $10 billion in assets. That's one bank. That one bank has more assets than all 22 of those black banks. I mean, I think black banks are important. I think we should encourage and grow them. But on the flip side, I don't think we should let these other banks, off the hook. And we've been trying to lure one of the black-owned banks, to Dallas, and we've been unsuccessful.
Okay. All right. Any more questions before we move on to invite Reese?
Monty, I have a question.
Go ahead, Nicole. Thank you.
From a tracking perspective, there has to be somebody watching the watcher. Do we have the resource and the opportunity to start some type of tracking where people can call in and say, hey, I'm not really sure, whether or not this is a valid complaint, but this is what happened in my circumstance, getting that information out there that they can contact, CFPB or whomever, if these type of things occur, because if you don't have the information that banks are doing discriminative practices, if we're not tracking that, then they're, even though they may say, okay, we've got a commitment to the community, if they're not underwriting those files in a fair way, right? A lot of people are missing out on opportunities to capture funding, so that just getting that information out there in terms of where they need to go and how they need to report, when they feel like they may have encountered an unfair circumstance.
And you bring up a good point. I mean, so yes, there are avenues to complain. I mean, I think that, where we lack is sometimes, knowing how and where to complain if you're not, within banking. I mean, so possibly Monty, we can get together and I can kind of share those sites and even maybe put them on the main website. So even from a fair housing standpoint, the city of Dallas has a whole office dedicated, to that. And each city does, or then you have, HUD as far as the entire Metroplex. I mean, but again, if nobody doesn't know that, it's impossible to complain. So you bring up a good point, and we're going to provide solutions, for that. And I think from just a lending standpoint, what we are doing is we've asked Community Foundations of Texas to give us a $25,000 grant, and that would be to build a database of all the 400 lenders that are in the Metroplex, and let's see where they're lending. This conversation is banks, but non-banks or credit unions, in a sense, kind of do the same thing. It's just easier to identify and hold the banks accountable because of the Community Reinvestment Act. And so in the last session for the Texas legislation, Royce West did try to put forth a bill that would try to hold non-banks and insurance companies accountable. It did not get out of committee, but in 2 years, we're going to try that again. I mean, so every little bit, particularly, helps, especially if we're talking about, our African-American community.
Okay. All right. Thanks again. I may have jumped ahead and first of all, I forgot to let the VP, Perret Parker, invite everyone by greeting. Go back. I'm gonna speed back, go back, and Perret, go ahead and invite it and greet everyone, please.
Well, we were perfectly okay, but hey, everyone, how are you guys doing? Glad to see all these nice, wonderful faces. There are some new folks on the call, and if this is your first time joining us, then say hey, let us know who you are. If we'd be glad to have you. We're glad that you came aboard. And there are some new members. If anyone wants to join, remember what Monty said, you can go to the website and join us today. Okay.
And we're narebdallas.org. Okay.
I can put that in the chat as well.
Okay. All right. Next up, we have the city of Dallas, Reese Collins. Reese, will you please unmute yourself, please?
Definitely. Thank you guys. Hope you guys can hear me okay. Appreciate you guys having me on. And so I had a few pieces that I just wanted to kind of highlight. I will be completely honest just about kind of what's happening on the housing perspective from what we're adjusting with the government and how we're trying to move funds accordingly. But my role in the city of Dallas is I oversee the portfolio for all new developments and some of the existing developments that we have for multifamily and single family throughout the city. Then I also oversee our down payment assistance program. And starting with the down payment assistance program has definitely been tough sledding based on the requirements that we have in place from us from the government. Just seeing Ms. Booker's presentation, you're offering stuff that we aren't even able to offer right now through the city of Dallas. And so it's been a huge challenge. As we serve families that earn between 60 and 80% of the area median income, we're seeing that pretty much anybody that makes 65, 68% or above, and they are able to go through our program and we're able to say, hey, we can provide you $40,000 to $60,000 of assistance. They still aren't able to get loans because they're getting outbidded or they can't come to the table with enough cash because of the restrictions that we have set forth from the government that we can't go over appraised value in any way possible. And so it makes it really tough. And so we're trying to find unique ways to push that through. And I say it in that manner because as overseeing the portfolio, we are setting up different developments throughout the city that is guaranteeing affordable housing. And we're able to kind of go around our housing policy to create opportunities for more homeownership opportunities. That typically ranges in prices from about 170 to about 260 in that range. And we're able to provide that information to you guys in advance to say, here are where homes are going to be developed. Here are also the site plans. So we have that well in advance because we do encourage all of our developers to pre-sell all their product because part of that matrix is that we are developing mixed income communities so that we can pretty much guarantee that we're going to have 49 to 51% affordable, and then the opposite will be market rate. That way we can help develop that equity and create that opportunity for families that are moving forward through that process. As James was just talking about banking below 30, we had a call yesterday. So we're always willing to work with people to identify different ways to get access to funding, whether it's through general construction, whether it's through trying to put in infrastructure. I am definitely honest that we are still the city. There is a process, and some people don't want to go through the laborious process at times, depending on how you approach it. But the big thing that I will say is that we do still have money. What's unique about our program is that even though the market has been hot for the last 2 years, federal funds are good within our department for 4 years. So as we expect at some point this market will change, we expect to still have some of this money sitting there. On the back end, where if you are developers who are trying to build, we definitely have about $27 million that's available. We expect to get more from the infrastructure plan that President Biden is putting forth. But again, a key piece is that our program is really tough to move forward right now because of the restrictions that we have in place. We are definitely getting people who are qualifying. It's just when they get out into the market, they're just unable to compete to prevent them being into a predatory situation. So that's the big component from the city. The big thing that is never ending is we're consistently pulling land back into our portfolio and pushing it back out there with a mixed income approach. And if anyone would like to talk more about that, I definitely can work through Monty so that we can make that happen. Thank you, Monty.
Appreciate it, Reese. Any question for Reese?
I actually do have a question for Reese. Hi, Reese. My name is Ero again.
Yes.
And my question is in regards to two different aspects. The first one that I asked is about like the people who are on Section 8. I work with a nonprofit that helps with the Section 8 program that allows members to recipients to be able to use the housing program that is available, but that program has been like halted for almost 2.5 years. It was available and then people got on it and then all of a sudden nothing. But to hear that there's money available but it's not being given to people who need it, like what's the process to be able to get those funds released or to get those funds out of I guess the city's bank account into people who actually need it?
Great question. Great question. So there's actually a few questions that were mixed in there. So the first thing that I will say is that there's always this debate within City Hall as in who is to serve Section 8. Section 8 is essentially defined as people who earn less than 30% of the AMI. And that is the purpose of the Dallas Housing Authority. That is their sole focus on that. We within the housing department, we try to set up our program to where that if a person can qualify for a loan, they should be able to come through housing and get some type of assistance. We shouldn't be discriminating to them. The challenge comes in depending on which program you're going through. So down payment assistance, for example, funds are typically set for 60 to 80 of the area median income. There are some leeway in that, but the challenge is adjusting with the income protocols that are put in place. One thing that we explain to lenders that come through is that HUD currently requires a Part 5 income, which basically takes a deeper snapshot into a person's background and their income, which sometimes disqualifies them. So we're actually in the process of waiting for some of President Biden's new laws to come into place to make that adjustment. Some of this is still rollover from the President Trump administration, which is something that we're waiting to adjust. Now, if it's working through a new development concept where someone receives some type of funding from the city and they're agreeing to build X number of houses, we can put into that agreement that they can serve those families while working in that manner to where we can move money in that way. The other way that I would say is that if you're working through a nonprofit, we have seen multiple loans come through Habitat for Humanity, where they have been able to work out with their portfolio that a person who was on Section 8 to use that towards purchasing a home. So there have been some nonprofits that have done that. Unfortunately, the only way with the city is through an actual development project and not through our down payment assistance because of how we receive federal funds. So I hope I kind of answered your question.
You did, and that was a great breakdown because I wasn't aware of those details that you shared. And then my second question goes to the millennial group. Like I'm one of these. I like to consider myself an OG millennial, one of the first people, one of the older ones. And as we've come out of college, we have a lot of people who have homes. I mean, sorry, not homes, but they have the income, they have the qualifications, but because they have these student loans, they're not qualified to buy homes. And because I think it's the debt to income ratio that is really holding them back. So what are some of the things that the city can do to help alleviate that? Because it's kind of disheartening to see people who have done everything to achieve this quote unquote American dream, but then because they went to college and took out student loans so they could finish their education, they're no longer qualified.
Man, that's great. I have two big pieces on that because number one, that's my job, is to advocate in that manner. But a part of me wants to give a chest pass to Monty, to Carol. I mean, we've been talking for almost a couple of years now about how do we consistently improve the program in that aspect. One way that we started to do that is we've adjusted our back end ratios. Typically, the top and front end, we're sitting between 30 and 40. We've now expanded that. So on the back end, you can have upwards of 45%. We are pushing to get to like a 47. And then on the front end, we're trying to set it to 34 and below, potentially 35 and below. And I say it in that manner because what a lot of people don't always realize as we're working through these changes through our housing policy, we have to educate our city council members. And at the end of the day, we need to make sure they're on board to vote and move these things forward. So putting together a plan that's constantly educating them is a key component for us. Some people believe that, some people don't. And that is the plan that we have in place currently, is to constantly update our policy based off of people in the industry just like yourself. I would also end with, we should probably have consistent conversations like I have with Monty and Carol, just to talk about what are you seeing in the market? Because the information you bring to the table carries way more weight than mine does, because I see council every day, just about. So being able to come to the table and discuss that at some of our committee meetings, when we're able to do that, is huge. I'd also encourage you to get involved with the Housing Policy Task Force, where we do address a lot of these issues and try to discuss those things. So that's a key component that I would toss back out to you is, let's talk a little bit more after this so that we can take those steps.
Okay. All right.
Thank you, Mr. Reese. I appreciate it.
So Reese, I do have one question. If any lender on the phone wanted to sign up for the down payment assistance program as far as to be a lender for the city of Dallas, what would be their process and who did they contact?
Thank you for saying that, for that little plug. All they have to do is contact me and we can work with them to get them approved. It literally takes about an hour. That is pretty much the easiest thing to do, just so they can be aware of the parameters of our program, to know about the funds that we have available. The program that we're actually that has been moving the easiest, that is out of funds that we hope to get funds next month, is our Target Home Buyer Incentive Program. And basically it targets police, fire, medical professionals, and then also librarians fall into that range as well. There's a list that fall in there, and teachers, excuse me. And as long as they're purchasing a home within the city of Dallas, they can qualify for up to $45,000. And there are some income restrictions under 120 of the AMI. But the unique thing about it is that we know people don't always want to live where they work, and they want to kind of have some business in between there. And that's a unique opportunity for them. Thank you, James.
All right. Thank you again, Reese, for coming to our monthly meeting to present. Next up, we have Miss Theodore Redwine with a real estate update. Miss Redwine, are you ready to speak?
I am ready. Good morning, everybody.
But you had, I'm sorry, Ms. Theta, you had one question from Pat Douglas.
Go ahead, Pat.
Okay, I was just gonna ask about because we have been getting information about the Duncanville Road project that they presented the other night. Are you familiar with that? Because I saw, I went out there and I saw David Noguera. He was there. He did speak, and I think they had a Zoom meeting on yesterday, if I'm not mistaken. Did anybody attend that one last night? But anyway, I want to know, is that one of the projects that you were mentioning? Is that one of the government projects? Is that receiving government funds? And is that available for developers to, do the same thing? And I'm just trying to see if that was a effort, and will they be using city funds for that?
Great question. The quick answer for you is that is not in my portfolio yet. It has not been approved by council, nor have I seen an agreement. I am aware of the project, and the understanding that I have is that the community meetings are being held to identify the best plan of action of what's going to happen with that development. So in short, nothing has been assigned from a housing perspective to that project.
Okay.
Okay, right. I just noticed that you said that they had to be pre-sold or whatever. Is that right? Correct?
We encourage them to, yes, ma'am.
Okay.
All right. Thanks again, Reese. Ms. Redwine, please finish.
Okay. Please. All right, here we go. So good morning, everyone. We're going to pivot, and I'm going to discuss market status and how you need to brace for where we are and what we're going from a marketing perspective. So I want you to take a look at these indicators and use these going forward, from today going forward, as you plan how you're going to serve our community. Now, one of the first things we should be looking at when we're talking about market status has to do with population growth. So we know that there is a shortage of available housing, and we know that it's artificial. I've talked about this for several months now. We know it's artificial. We know that people did not move because the government allowed them a forbearance. We get that. Now, as regards the shortages, et cetera, that's what we're going to dive into right now. So you get a better understanding of why we're where we are, because it does vary by area. And the programs that we've just discussed, the whole issue right now is that there's no properties. Well, there's going to be plenty of properties available, and that's what I'm going to go into today. So one of the first things you want to look at is population growth to permits. And permits issued are permits that are associated with new builds or renovation. Now, the number of permits issued is exceeding, and we're only talking the Dallas County area, Dallas, Tarrant, Collin County area. It currently exceeds our population growth. So if you look at our population growth, we are not growing. And over the last 20 years, we have not grown, and COVID did not improve that. We aren't seeing a surge in COVID babies as a result. We are seeing an increase in divorces, however. Now, when you don't have a population growth, it doesn't make sense that you have an increase in permits, which is what we have. So couple that with the fact that we have an issue with an aging population. So at this point, 50% of our population falls into the category of seniors. Now let's think about this. If 50% of the population falls into categories of seniors, they will be retiring, and that's a whole nother equation as we look at housing. That's one of the reasons that one will be looking at building housing with an aging population in mind, which means one story, which means no stairs, which means master on the first floor, second unit on the first floor in the event that we have someone who wants to age in place. The other category when we're talking about population, because remember, in order for our economy to grow, there are certain things that need to be in place. And I've done segments before that are directly related to the issue of logistics, what products are being sold, what products are being requested, and which ones are not being requested. We went through that in depth. And I did a segment on Business with Red Wine, my podcast. So you can go back and listen to those where I tried to bring in truckers and they were explaining where we are with that. Now, immigration, let's talk about how immigration is an issue. The immigration population continues to decline, and it is declining greatly. That, and I'm talking our area, that directly impacts housing and population. Now, remember, right now we have people who are just in place because of the moratorium. We have all these new bills, and the new bills were because we did not have any place for these people to purchase. Well, the lumber index was one of the reasons we have been told that there has been an increase in housing. Over the last 52 weeks, at the beginning of the 52 weeks, lumber was running $407. Now, the peak was $1,733. This is over the last year. So at the peak, that's when prices skyrocketed. There is a daily price index, and it has dropped 40 points, and we are now down to 855. Now, granted, that's double the 407, but we're still seeing new home builders that are increasing and using lumber as the reason when lumber prices have dropped. Now, we have no reason to believe that price is going to be going back up. So what we're looking at is a decreased population, a lumber index that is dropping. And I did want to address the issue of migration. Migration from cities like California. Now, Dallas ranks in the top 4 cities as far as the number of people who have come here from California. However, keep in mind the number of people in Dallas versus the whole state of California. And the truth of the matter is the percentage is a very, very, very small percentage, and it is not impacted our overall population. But what it does do, it is part of the reason California has been denoted as one of the reasons for this artificial bubble, because they have come in, what few, they have entered our market and paid more than the properties were worth. Okay, so that's what we're looking at. Now, we know statistically that with Californians, when their home values skyrocket, as they have, when they skyrocket, they migrate to other states, which is what they've done. We also know that when the prices drop, like they did in 2008, they go back to California. So keep that in mind. Now, tech companies are also a really good indicator of where our country is and how stable our economy is. So if you keep an eye on the Zillow, the Facebook, the Google, the Apple, and as if you hear about any kind of layoffs, you know that it's going to come very, very rapidly, because the tech companies are also one of the key reasons that values have increased. But all indicators are that we are now well underway with the correction. So all of those new permits, I would anticipate that in about 6 months, you will definitely see a drop in what those property appraised values will be. We won't have the same throngs of people waiting. All that's going to be gone. I've attempted, as I said before, to get my clients to wait. They did not. They bought new. I made sure they fully understand that they're going to have to sit there for another 5 to 7 years until the market corrects, because they're not going to be able to get their money out. And I mentioned previously that I sold a home to a family last November for like $298, and 2 weeks ago on Saturday, have another client on the exact same home for $365, exact same home. But those corrections are underway. So once again, you're going to check the lumber index. You can check that daily, and you'll see where that is. So as the new home builders are saying that the issue is, the cost of lumber, no longer is that the situation. Now, there were some artificial components that had to do with lighting, some other things, and the situation with the canal, and there've been some outside issues that have impacted, but those things have not impacted our economy to the degree we're hearing. So I'm saying that to say that as we've heard today about these wonderful programs, we do need to brace and prepare, because the market is opening up as these homes come onto the market. And as we just said, 50% of the population are baby boomers. So there's only one place to go, and they're not generally looking for new homes. It does happen on occasion, but as a general rule, those homes will be coming on the market. And as we said, we've got more homes than we can justify with the number of permits, et cetera. So with that, there's going to be a shift. So you need to prepare. You need to make sure that you're reaching out to your clients that you've had in the past, so that they understand you're there. And we do, as you're looking at new homes, you need to look at them differently, and you need to look at them with your clients differently. Go back to looking at homes with 2 masters, where as we have an aging population, they look to maybe live with others, whether it's their own children or with its other seniors. And Ashley is a great resource. As you know, she's an expert when it comes to aging in place and assisted living. And assisted living is a whole new vision now. Think in terms of Golden Girls as the type of housing people are looking for. Well, with that, I look forward to everybody making sure they're well aware of those programs that we've got available, and that they're using them to help the new families get into place, and to help us of the older population age in place. Thank you, Monty.
Ms. Redwine, I think Deja had a question. Go ahead. Deja, you ready?
No, Monty, that's me. That's Ira Thomas.
Oh, I'm sorry, Ira. Go ahead, Ira. You had a question?
No, that was for Reese. I got it.
Okay,
Thank you.
All right. Any question for Ms. Redwine before she exit? Okay, no questions. All right. Once again, thanks again for always giving us great information and an update, Ms. Redwine. Giving you a little what to expect for us in the upcoming months. July the 8th, we're going to have a NAREB Dallas Reconnect at the Canvas Hotel, formerly the Nilo, on Botham John. Coming up July the 8th between 4:30 and 6:30. We're also having Nationals is having a virtual / real conference in Cleveland, Ohio, July the 24th through the July 24th through the
27th or 28th.
27th, 28th.
Mm-hmm.
So they got, if you get opportunity, jump on NAREB.com and see some of the actual courses that they're going to be providing, which is a lot of great information. So if you guys missed the TARAB conference, you missed quite a bit of good information information to help pivot through this market or changing market, which in real estate we're always evolving. What else we have going on? Also, once again, you still have opportunity to be a member of NAREB Dallas. So I'm going to put that out again, guys. So we're trying to keep our numbers up. Do you have anything you?
Yep, Women's Council. I put the Women's Council website is in the chat, and our annual is $50, and we are looking as well to continue to grow our membership. Now, Monty, one thing I wanted to just ask Ms. Redwine, and maybe this is a conversation we can have next month since we're coming into the summer months. How are we to help our clients get positioned when it comes down to the Freon that is no longer going to be used on older units? The reason I ask that is because
Paulette, can you mute yourself? Paulette, please mute yourself. Thank you.
I asked that because I had a client that has had some things occur with her unit, and largely she's going to have to do a new one because some other things that have gone on. But I've noticed that with the older type of Freon versus the newer, you can still get it, but it's super, super expensive. So I think that's a conversation that we may need to have next month with regards to the impact of those changes and how are our service providers handling that, so we can really educate our clients on those potential issues that they might encounter on older homes with their AC units.
Absolutely. And it's also an item that we should probably address with TREC and the ombudsman that specifically handles home service warranties. So that might be good if we could possibly have the ombudsman as a part of our virtual session. So food for thought.
All right. Okay, sounds great. Thanks again, Miss Holmes and Miss Redwine. One more thing I have to add for next month, Miss Redwine, we will be having a course on discussing. She'll be educating us on how to do a short sale for our clients. That's for our meeting that we're going to have in the month of July, and also we're going to have Bland Coward with the Dallas Habitat explaining their program as well. So that's our next meeting. So the short sale education on a short sale will take a little time. So that's going to be really about 70% of our meeting next month. So you can help benefit your clients that are going through those struggles when it comes to a short sale, because they're about to change up, and we're not sure how the lenders will proceed once we come out, once they start putting the restrictions in place from the COVID implementation. All right, Ms. Holmes, you ready to pray us out?
Yeah, I do want to just also say to the members, we're going to be starting to prepare scholarships for September. And we will be rolling out our package and our criteria and requirement. So look for emails to come out about that. And if you have any students or students that are graduating from high school, we'd love to be in a position to help them. We had some great recipients last year, and we certainly want to take advantage of that this year. So look for that information to start coming out in the near future. All right.
We have our Juneteenth presentation. Are we having?
Oh, go ahead. Who's doing the Juneteenth presentation? And that is tomorrow, official date. You?
I know you're in a hurry, but I mean, it only comes once a year, and it is a federal holiday now. So.
I actually have I just want to interject that I have a gentleman's name is Donald Cox that graduated from UNT with me, who's written a book called Juneteenth 101, and it tells the truth about Juneteenth, which is not what you think it is. So it's still negative. I mean, it still has to do with that, but I'd like to maybe have him come and share that at our next meeting, because it's, the situation's not going anywhere. So food for thought.
Okay, appreciate it, Ms. Redwine. who was gonna display from our meeting? Was it you, Carol, or was it Perrette?
I think we said Perrette.
Well, I don't have access to share it, but Carol, you can share it. I sent it via email.
Okay, just
Hey, Monty, this is Chris. While they pulling that up, I want to thank everybody for, supporting the drive. It was extremely successful. In fact, people are still bringing stuff and sending checks as well. So I want to thank everybody for participating.
Okay. You got some in your head that's
You like it, don't you? Wait till the fall, baby. Spring was just practice. We waiting for the real season to start.
Okay, just let you know you got some on your head.
Perrette, I don't see what you sent me. Did you send it to Women's Council or to me directly?
No, I sent it to Monty. I'm sorry.
Okay.
Let me open it up.
Okay.
All right.
Well, we must give, while they're pulling that up, we must give Opal Lee some accolades. Yay! She marched to DC for 5 years. I mean, that's an accolade all by itself. She was 89 when she started. But she marched to DC for the purpose of trying to get Juneteenth to be a national holiday. It took her, what is that? She's 94 now. So that's pretty awesome for a 94-year-old to be marching. She got about 300 miles logged, and now it is a federal holiday as of yesterday. So that is a hand clap of praise right there. Can everybody hear me?
Yes, we can.
Oh, okay.
I'm trying to.
You can't pull it up?
No, I don't have the email, Perrette. I'm sorry.
Well, let me see. I was going to try to share it in the file here. Let me just share it and see if
I'll give you access so you can share it. Hold on a second.
Okay.
Give you access so you can share it. Go ahead, Perrette. You can share the screen now.
Everyone see that?
Yes.
It's just 5 quick facts about Juneteenth. As everyone knows, we always talk about the flag and we always put a red, green, and black flag up, but it's actually blue and red, and it resembles the actual national flag of the United States, but 1 star. And just the quick facts that enslaved people had no idea that Abraham Lincoln had emancipated all the slaves in 1863, January of 1863. It took them 2 years for them to get to Texas and let them know. There were many reasons why they probably didn't get there, but we won't talk about those reasons. I'm sure Miss Theda Redwine, whoever that person is probably going to share those ideas as to what caused them to not be able to get that information over, but it took them 2 years to do so. Well, once they did that, and they told them, now you become hired labormen. That was what he told them, that you are now not slave owner and slaves, you are the actual, CEO. In other words, he gave the masters that particular title, that now you have hired laborers. Of course, they hadn't hired them, they hadn't paid them, they hadn't done any of that. So we know that was a lie. And so the free people had difficulty in celebrating because there were laws in place that kept people from actually celebrating. And if, I don't know about you, but my parents didn't really celebrate Juneteenth. I don't know why. I probably should ask them. I'm 49, almost 50 years old now. And we talked about it, but we really didn't celebrate it. But a lot of people who were from Galveston, I knew a lot of folks who did. And so there was always this mix up of, how do you celebrate Juneteenth? What is it? What is it all about? And I also have a link that everyone can look at to get more information as well. But don't blame yourself if you don't know really about Juneteenth. The specific facts are, they got the word in Galveston 2 years after the actual Emancipation Proclamation that was done in 1863. They did it June 19th of 1865, they were told, now you're free. But as we all know, once you free someone who you've oppressed for so long, they have no information, no funds, nothing. So a lot of people left the state of Texas to try to find their families, and a lot of people stayed and did what they could. But as you can see, like I said, this item I can send to everyone. These are just 5 quick facts. When people celebrate Juneteenth, they usually drink red soda, strawberry soda, something with red in it to, commemorate the blood that was shed during Juneteenth, during slavery. And so we are, at that point, we were freed, or Black people were freed.
Okay. All right. Thank you, Perrette. And once again, Ms. Holm, are you ready to pray us out?
I am. Thank you all so much for joining us today. We've had a wonderful meeting, and we look forward to seeing all of you next month. Happy Father's Day to all of our fathers. And let's say a quick prayer. Father, we thank you for what our eyes have seen, what our ears have heard, and what we've been able to comprehend. So much information to stir us and to engage us and to propel us and to move us to action. Our communities need us, Lord. Even when we get weary in our well-doing, we look at the need, and the need is great. We have to be entwined into community, into our committees to help make a difference and help us to know how to make a difference. Help us to be engaged and desire to make a difference. Help us to know that our work is not in vain. Our labor is not in vain. And we are more than just a commission, but we are commissioned to make a difference. And so help us to see it that way. We know, God, that the world is has had many trials and many tribulations, but through it all, you've brought us as a NAREB family through them. On the line, we've had people who've had health challenges and financial matters, but yet through it all, God, you have brought us through. And for that, we say thank you. Now, Lord, as we depart from this meeting, but never your presence, we ask that you keep us and bless us and prosper our hands. Help us to maintain our integrity and be people of standard and be professional. We are the standard bearers, and we are the ones who are called to make a difference. Help us to see it that way. Help us to be those kind of folk who look for ways to be a blessing. And we ask that you bless us and make your face to shine upon us and give us your peace. It is in the name of our Lord we do pray. Amen.
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 Okay. Well, you
Be
guys,
safe, Monty.
okay, appreciate it. You guys enjoy your birthday, Pat. And you guys take
Thank
care.
you.
Happy Juneteenth, everybody.
Happy
Appreciate it.
Juneteenth.
You guys have a wonderful day. Bye-bye.
Indeed. Bye-bye.